Morning everyone, I hope you're well, hope you're doing alright. Guys, today I want to show you the importance of technical analysis, alright? I want to show you how important technical analysis is, and I want to prove it to you because I rely a lot on fundamentals, and you guys see that on Twitter, for example, or X if you want to call it that. I always talk about the fundamental aspect of the charts and what I believe will happen from a fundamental perspective, but today I want to show you the importance of technical analysis and how important is it to use technical analysis along with your fundamental analysis, and how it can help you avoid a lot of losses that you would take if you only had to rely on fundamental analysis. So first of all, let's start with the fundamental analysis of this chart. Guys, I am bearish on NZD-JPY. Alright, as simple as that. New Zealand has a really high unemployment rate, and therefore their central bank is consistently trying to ease the suffering of the labor market by consistently cutting down interest rates every time they do a meeting. Today, they just cut down interest rates a lot more than what we expected. We expected the central bank to cut interest rates by 25 basis points. This is what we expected, and instead they gave us a 50 basis point cut. So they cut it down from 3% all the way down to 2.5% instead of cutting it down to 2.75% as expected. As simple as that. I don't believe that I need to over-explain that. They just cut interest rates a lot more than what we expected, which is bearish news for the New Zealand dollar today. Alright, as simple as that. Now we go towards Japan, and guys, I read the economic data that was released for Japan for the past few days, and this is what I realized. I realized that through the economic data that they released, we realized that their household spending almost doubled from what was expected, and also from the previous, because even previously we had 1.4% household spending, and right now we have 2.3% household spending, which means that people are spending double what we expect them to spend. Now guys, when people spend a lot, inflation goes up. Alright, this is very logical. This is economics 101, and therefore all of you should know this. Here's the thing, guys. If everyone wants to buy iPhones, the prices of iPhones go up. If everyone wants to buy gold, the prices of gold go up. So if people spend more, prices go up and inflation goes up. Now, how does a central bank combat inflation? By raising interest rates. And therefore, this is bullish news for the Japanese yen that, okay, we have double the spending from what we expected, and therefore inflation should go up a lot more than what we expected, which means we might need to raise interest rates in order to combat that inflation. And raising interest rates is bullish news for any country, and in that case it's bullish news for the Japanese yen. Alright, that's number one. Number two, the trade balance in Japan is also doing a lot better than expected, and it's doing a lot better than the previous trade balance. So trade balance is basically the difference between exports and imports. As simple as that. So how much money is the country making? And Japan right now is making a lot more money than it was making previously, and it is making a lot more money than what we expect them to make. That comes, guys, after Japan has secured a trade deal with the US. So for some time in the previous few months, Japan's exports suffered because of the Trump tariffs on Japan. Right now, they just secured a new deal with Trump, and therefore the suffering of their export market eased. And we can see that right now they're making a lot more money than what we expect them to do, and also from the previous. So therefore, that's also bullish news for the Japanese yen. As simple as that. I might have bored you with the fundamental perspective, but it's very important to understand. So as simple as that, I believe in a negative New Zealand because of cutting down interest rates, and I believe in a positive Japanese yen because we have positive news for the Japanese yen, and therefore I believe that this market needs to go down and at the very least cover this gap. However, when I look at this instrument from a technical perspective, I disagree with me going in and selling right now, because I still believe that this market needs to go up and take out some highs before it starts going down. Now, why do I believe what I believe, and why am I going to be avoiding this sell through to the downside? Because here's the thing, guys. We look at the way the setup is being created. We have these stops right there. We have stop losses above these stops. That's supposedly, and therefore we look at the grab through to the upside and a bullish momentum through to the downside. almost everyone is selling NZD/JPY right now because it's a very clear setup, right? We have tops liquidated and then the market pushed down with momentum. Then we're coming back into this whatever imbalance, whatever you want to call it, or this order block, whatever you want to sell from. So we're coming back into these areas where the market is supposed to push through to the downside. On top of all this, we have these double bottoms, as you can see, and therefore stop losses below here. So everyone is like, okay, liquidity to the upside is taken, and therefore right now we're going to take out liquidity through to the downside, and everyone is selling NZD/JPY right now because the fundamentals are bearish, and we do have some sort of a technical bearish setup right here that we can go ahead and sell. However, guys, very simply, I zoomed out a little bit only to find that the market, those are the tops, right, that we are targeting. Those are the tops that we said or we claimed were targeted through to the upside. However, what the market did is it didn't target their stop loss area right here. It didn't target these highs. What instead it did is it created more double tops right here with that high. As simple as that. So we didn't actually target what we would anticipate or expect the stop loss areas of those highs to be. We didn't target this high. What we did instead is we came shy below it and we created even more stop losses through to the upside right here. So even more liquidity right here that can be absorbed next. And therefore, I don't see NZD/JPY melting through to the downside and taking out these lows and coming down into this gap right here. So I'm not going to be selling NZD/JPY, even though I have a bearish analysis for NZD/JPY. What instead I'm going to do is I'm going to wait for NZD/JPY to push up and take out these highs, take out the 88.500 psychological level, and then we see where we go from there if a setup emerges through to the downside. But right now, I believe that it is a bad idea to go ahead and sell NZD/JPY right now through to the downside, even though it looks like a bearish setup exists and it looks like there's stop losses through to the downside, and from a fundamental perspective we are bearish. So someone looking at this chart right now is heavily bearish on NZD/JPY. However, due to the fact that the market didn't absorb the stop losses above this high, actually we created even more stop losses up there, then I'm just going to wait for the markets to absorb these stop losses first, and then I'm going to see how I trade that as the market goes through to the downside. As simple as that. That's my technical analysis, and therefore that's why I'm going to avoid taking this trade. If I were to take this trade, it would have been something like this. Like that, stop losses above here, and then maybe the target right here around the 1 to 2 risk to reward ratio. I want to show you that this will go up and hit my stop loss. I want to show you that. And then from there, we can see if a setup emerges through to the downside. Let's see how that goes. Good morning, everyone. Hope you're well. Hope you're doing all right. So, guys, as you can see here, the market would have made it up into the area where my stop loss would have been if I had taken this trade. This is the benefit of technical analysis, guys. I had a fundamental picture. However, due to my technical analysis skills, I avoided a loss that I would have otherwise taken. Right now, I just entered on NZD/JPY through to the downside after the market has taken that high as I previously predicted. And right now, I'm going to ride this movement all the way down into, at the very least, these lows. Let's see how that goes. So, guys, as you can see here, and as expected, the market melted down after taking out these highs through to the upside and took out all of these lows through to the downside and even went all the way down into that gap right here. You can see right there, this is the last day of the week on my account, which is Friday. I sold a little bit of gold, a little bit of NZD/JPY, and that was about it. So guys, the main goal as traders in order to reach profitability is to try to reduce our losses as much as possible so our profits can carry our accounts. How do we reduce our losses as much as possible? First of all, the first step is by studying fundamentals. Because if you study fundamentals, for example, you wouldn't sell Bitcoin when Trump does you wouldn't buy Bitcoin when Trump does a 100% tariff on China, right? You wouldn't do that because you understand that fundamentally that doesn't make sense. You wouldn't buy gold after the peace deal in Gaza gets announced. You wouldn't buy gold all the way above the $4,000 level right here because you understand that the peace deal was just announced and this is bearish news for gold. And therefore, by not buying gold when the peace deal is announced and by not buying Bitcoin when Trump announces 100% tariffs on China, you would avoid those losses even if you have a technical justification to buy those instruments. You wouldn't do it because the fundamentals oppose it, and therefore you would avoid these losses, thus reducing the total amount of your losses. Number two, the way we reduce our losses is by studying technicals. For example, in that case, if we go to NZD-JPY and we use that trade as an example, you wouldn't sell NZD-JPY right here, even if your fundamentals tell you that this is an acceptable trade to the downside. You wouldn't do it because your technicals tell you, no, we might go up and take out these highs before we actually start going down. So therefore, you avoid taking this loss even though fundamentally you agree with it, and therefore you reduce the total amount of your losses. And by reducing the maximum amount of losses that you can possibly reduce, your profitable trades carry your account and you reach profitability. As simple as that. I just wanted to share that small lesson with you guys here, and I'll talk to you guys again soon. Goodbye.